When we think about trading and investing, it gets used synonymously together all the time and can be interpreted as the same thing. I use them interchangeably all the time too, but in my head, they're separate ways of thinking. Well, what do I mean by this? Well, think of it as two different risk profiles. And I like to think of trading as being short-term investing, trading as being short-term and investing being more long-term. And in my head, I use short-term trading more for generating cash flow, and each trade or transaction is relatively short-term, like less than a year. And in my head, I will associate long-term trading to be more than 3 years and is more of an investment of my time and capital. And I'll put in more of my time to do a deeper dive with regards to value and understanding of the company. It might be best to relate short-term trading with some of your short-term goals and long-term investing more like your long-term goals. Think of making several short-term trades with small gains, and you just build the portfolio or pot of money larger for the investing trade where I will need to feel more confident and committed to execute. So I will invest more time and energy and likely more capital into the trade and just be patient for the intended results because it's longer than 3 years. If I make several short-term goals and they are achievable, then I can get to my long-term goal much easier just by picking away at the result. Thinking of trading, it's much like when you're a kid and you trade up for something or you trade cash for something of value to you. Maybe I might want to trade my bike for a skateboard ramp so I can do skateboard tricks because that's what I'm into at the time. The bike doesn't have the same value to me because I don't ride it as much as I do my skateboard. And when you think of trading money for stocks in the stock market, it is very similar in that the other person in the trade thinks they're getting a better deal. And each of us have different needs for cash or different values we put on the companies. And it's for this reason why we can trade and make money on trading companies or stocks. And we're all at different stages in our investing career. And when I originally learned about how to trade stocks, I kept asking, why would someone want to be on the other end of my trade if I think the price is going to go up or go down? And I think buying and selling stocks is more like trading an amount of money for part ownership in a company. And it really comes down to different styles of trading, investing, and different types of investors with different needs or risk tolerances. Maybe I want to buy a stock and hold on to it for a couple weeks because I see an opportunity that the price is going to increase in the next week for reasons that I investigated, or my technical analysis suggested that's what I think is going to happen. The person on the opposite side of my trade may have a different belief and they think the stock's going to go down. So they want to get rid of it before it does, so they sell it. Different needs, different strategies. And this is where you manage what you can do by how much time you put into it. And the K2 style of trading looks at daily chart time frames. So you're likely going to be holding for weeks to months to years and not worrying about the intraday price swings like a day trader would. And it's good to think about this as you learn to manage your trading emotions over time.